Today, we're dissecting a report on Rocket Lab.
Yep, specifically their Q3 2025 results. Record revenue, which is great.
But also a delayed path to profitability.
Yep.
Which is...
less great.
Exactly.
The material kicks off making a really strong case for RKLB's operational strength, highlighting that $155 million in revenue and a 37% GAAP gross margin.
And that's crucial context, especially with how the stock's been moving.
For sure.
But that context, that strength, it feels like it gets a little lost. Our goal here is to really sharpen that narrative, to reframe it so the listener gets why those record numbers are so significant, especially against the neutron delay.
Okay, so let's get into the first big point. The report's narrative architecture could be a lot stronger by prioritizing the space system's growth.
Right. This is the true source of their financial resilience right now.
As I'm reading it, the analysis does a good job identifying this. I mean, it points out the 48% year-over-year revenue jump is coming from space systems, the quiet giant in the company.
It does, but then what happens?
It immediately pivots. It goes straight from that strength to the big hurdle, the neutron delay pushing profitability out from 2027 to 2028.
And that's the structural weakness, right there. The report basically treats space systems like an appetizer.
The setup for the main course.
Exactly. The setup for the bad news, and it makes the neutron delay feel like the primary unavoidable takeaway.
So you're saying it buries the lead. This huge structural shift away from just being a launch company it's kind of diluted.
It's massively diluted. It lets the challenge, the delay, define the entire company, instead of letting the company's newfound, durability and strength define the narrative.
I agree that resequencing is critical. I mean, the common market narrative is all about RKLB's launch delays, and this analysis is clearly trying to fight that.
It is.
But let me just push back a little here. Are we risking minimizing the neutron story too much? For a lot of growth investors, neutron is the entire story.
That's a fair point. A very valid pushback.
How do we re-architect this to build up that space system's floor without making the big growth engine, neutron, feel like an afterthought?
See, the fix isn't to bury neutron. Not at all. It's to fundamentally change its context.
Okay.
The report needs to be resequenced to establish RKLB's diversified strength first. You lead with that. The fact that they have a robust high-margin space systems division, that is the real news here.
So the delay is just, what, the environment?
It's the environment that tests that durability. It's not the defining feature of the company anymore.
We need to flip the narrative hierarchy. Okay, so how do we actually do that? How do you execute that in a way that the reader can really feel it?
One very concrete way to do it is to start the path to profitability section by detailing how that 37% record gross margin is directly supported by space systems.
Ah, okay.
You use that to establish this new fundamental floor for the entire company. So instead of the current framing, which is basically revenue is up but profitability is delayed,
it becomes something more like the revenue is now structurally solid.
Precisely.
And that is why the profitability delay is now manageable, not catastrophic.
That's a much sharper angle. It really shifts the message from delayed gratification to something like guaranteed foundation.
It emphasizes quality growth, high quality, high margin growth, not just, high volume.
Right.
And to build on that, another really powerful way to frame it is to present the neutron delay not as this unexpected hurdle, which is how it kind of reads now.
Right.
But as a test of the financial durability that's already been secured. You've got the $1.05 billion in liquidity, you've got the space systems revenue. You use that strength to absorb the negative news.
So you're de-risking the delay in the reader's mind before you even fully detail it. You're de-risking it. This framing lets you explain why it's okay. The high margin means RKLB doesn't have to cut corners or rush neutron development because they're under financial pressure.
Which ultimately makes the neutron outcome itself more likely to succeed.
Exactly. It de-risks the major growth path. The way it's written now, the impressive 48% growth gets immediately overshadowed by the challenge. We need that space systems durability right up front, defined by that 37% margin.
Okay, that makes a lot of sense. Let's move to the second critique, which is about justifying the bullish analyst sentiment. I really like that the report includes specific price targets.
Yeah, the $60, $63, $75 targets. It's great context.
It is. So looking at this section, it notes that even with the neutron delay, you've got major firms, Bank of America, Stifel, staying bullish. And the reason given is that RKLB is seen as the, quote, only reliable alternative to SpaceX.
Which, makes perfect sense from a high-level industry view.
Yeah.
But to really maximize the impact of the report, especially for a more sophisticated audience, the rationale for that bullishness needs to be tied directly to the financials.
It needs a more concrete justification for why those $60 to $75 price targets still hold up.
Exactly.
Hold on, though. I mean, isn't calling them the only reliable alternative to SpaceX the best possible argument? That's about industry structure, about a duopoly. Why insist on digging into balance sheet numbers when the market position narrative is so powerful?
Because market position narratives can evaporate overnight under financial pressure. The weakness here is that the material justifies the high price targets with a qualitative argument, market position, instead of the quantitative data that actually de-risks the timeline.
So you're saying a $75 target isn't just for being number 2.
It's for being the only number 2 who can actually survive a delay to 2028 or even beyond without having to do a desperate dilutive capital raise.
I see. So the quantitative data, the cash, the margin, it's not just background context.
No.
It's the primary financial justification for why analysts aren't slashing those targets down to 25 or 30 bucks.
That's it, exactly. The listener needs to hear that connection explicitly. We have to use that $1.05 billion in cash and the 37% margin as the bedrock for the whole valuation case.
Okay, so give me an example. How do you do that?
For one, you explicitly connect the liquidity to the delay. That $1.05 billion. The biggest question an investor has is, how long is the runway?
Right.
Does that cash provide a buffer for 1 year, 2 years? If the cash provides a multi-year buffer past the new 2028 timeline, then the delay is, from a balance sheet perspective, fundamentally de-risked.
And analysts can justify holding those high targets because the company has literally bought itself time.
It has bought time without threatening shareholder equity. That's the key.
And what about that 37% margin? That feels like a really powerful but underused data point in this whole valuation section. How do we leverage that?
Well, you need to analyze how that margin provides a baseline valuation multiple that keeps the stock above, say, $60, completely independent of Neutron revenue.
You're arguing the market is valuing it differently now.
It's a fundamental argument that the market is now valuing RKLB more like a high-margin systems integrator, a hardware company with a services moat.
And less like a pure capital-guzzling launch provider.
Exactly. If you can show that the space systems business alone justifies a higher floor for the stock, then the Neutron upside becomes, for lack of a better word, gravy.
Which makes the delay much less damaging to the overall investment thesis.
Infinitely less damaging. You have to integrate those balance sheet numbers directly into the valuation narrative.
Right, that's very clear. Let's shift gears to the third critique, the technical analysis. This section is structured well, for anyone who follows the charts.
Yeah, it's solid.
It clearly identifies support at $38 to $40 and resistance around $50. And it correctly notes the stock is in a consolidation phase after that huge run-up towards 74. It gives the charting experts good boundaries to work with.
The technicals are accurate for sure, but I worry that it's a bit isolated.
What do you mean by isolated?
The technical analysis is treated like this completely separate data point, disconnected from the core reasons an investor is making a decision right now. The chart levels tell you what is happening, consolidation, but they don't explain why it's happening or, maybe more importantly, who is driving the trading in that range.
So you're saying it's reading the lines on the chart but not interpreting the story behind them?
Exactly. And isn't there a risk that by focusing only on the technical levels, we're overlooking the psychology here? I mean, the stock dropped from $74 down to $40. That's a massive move.
Absolutely. That chart action is a direct reflection of the fundamental news. The $74 high was pure Neutron excitement. The drop was the market digesting the profitability delay.
So we need to link that investor psychology directly to this $38 to $50 range.
Yes, and that's the creative solution, I think. The big suggestion here is to overlay that fundamental narrative directly onto the chart analysis.
You want to link the investor psychology to these key price thresholds.
Right. You transform what is now a pretty standard consolidation pattern into something much more specific, an indicator of conviction versus skepticism.
That is a really creative way to do it. You're engaging the chart crowd and the fundamental analyst at the same time.
So walk me through it. Give me a concrete example of how you would overlay that narrative.
Okay, let's start with the top of the range, the resistance. You frame that $50 level as the exact price point where the short-term market expresses its maximum skepticism about the Neutron delay.
So hitting 50 and then falling back means what?
It means the short-term traders are effectively saying, I am not pricing this stock any higher until I see significant tangible progress on Neutron for 2026. It becomes this psychological ceiling.
A ceiling built out of skepticism over the timeline. I like that. So what about the floor? The low end of that range, the accumulation zone.
Right. Alternatively, you frame that $38 to $40 support level as the accumulation zone for the long term, patient money.
The investors who've read the balance sheet.
The investors who are specifically valuing that guaranteed safety net. The $1.05 billion in cash, the high margin revenue from space systems, this is where the money that cares about the balance sheet, not just the launch schedule, steps in to buy.
They're happy to buy the 2028 timeline at that price.
They are. And just like that, you've transformed a simple horizontal line on a chart into a rich narrative about long-term conviction battling short-term fear. That kind of integration adds, I think, immense predictive power to the analysis.
This has been a really insightful breakdown. I think the writer has done a fantastic job of capturing all the essential data points from Rocket Lab's Q3 performance.
Absolutely. The material is strong.
Now, it's really about focusing on the narrative architecture, making sure it matches the undeniable strength of those underlying financials.
And we focus on three main actionable areas to really strengthen the piece. First, re-architecting the entire narrative to put the financial resilience, the space systems division, and that 37% margin right at the forefront.
Making that financial strength the lead story, not just the context for the neutron delay.
Exactly.
Second, explicitly tying the quantitative financials, that $1 billion in cash and the high margin, directly to those bullish Wall Street price targets.
Yeah, providing that concrete quantitative justification for why the valuation holds up, even with the timeline shift.
Right. And finally, integrating the fundamental delay narrative into the technical analysis.
Explaining the psychological meaning behind that $38 to $50 consolidation range. You're turning simple chart patterns into powerful indicators of investor conviction versus their skepticism over the timeline.
Right. That is a very clear, very actionable path forward to maximize the impact of this analysis.